Hey guys, moving along with chapter 4, now we're going to put supply and demand together on one and the same graph. So over here to the right, we have our supply and demand schedule. And I want to talk about this graph a little bit. Let's suppose, guys, if you were looking at this table and you didn't have indication of quantity supply and quantity demanded, just cover them up and forget about that. So can you look at each of these column and tell which one is going to tell you about the law of supply and which one is going to tell you about the law of demand, or which quantities you will use to build demand curve and which quantities you will use to build supply curve. Remember, the law of supply and demand precisely works on the graph and precisely works on the supply and demand schedule. So let's suppose we're going to take the very first one, okay, very first column. Let's suppose QD is not there. So you see, when the price is low, quantity is high. When the price is increasing, quantity is decreasing. Price is getting higher, quantity is getting even less. So what kind of law are we talking about here? We are talking about the law of demand, isn't it? The law of demand, because the law of demand is saying if the price of the product is increasing, then quantity demanded is going to decrease. Remember, you all the time think from the buyer's point of view. When we talk about demand curve, we think from the buyer's point of view. What would you do? Well, if the price is higher, we're going to buy less. So quantity demanded over here is decreasing. And if we're looking at the second row over here, okay, second row. So when the price is low, quantity is very low. When the price is increasing, quantity is increasing. Price is higher, quantity is getting higher. So what are we talking about over there is supply, the law of supply, isn't it? Because the law of supply states when the price is increasing, then quantity supply is going to increase. Sellers wants to sell more because they're getting more money for each unit that they're selling. So let's use this information and really quick build our supply and demand curve. So I'm going to start with the quantity demanded first. When the price is 0, quantity demanded is 24, somewhere over here. When the price is 1, quantity demanded is 21. It's actually really easy. Price is increasing to 2, quantity demanded is 18, somewhere over here. At 3, quantity demanded is 15. 4 is 12. I landed at 11, and at price 5, commodity is equal to 9. And when the price is $6, then quantity is equal to $6. So I have these points over here. Remember, if I'm going to connect it, it's going to be a perfectly straight downward sloping line, and that's our demand curve. We're going to use the same graph, and we are building our supply curve. So when the price is 0, quantity supply is 0. When the price is 1, quantity supply is 5. Price increasing to 2, quantity supply is equal to 10, somewhere over here. Price is 3, quantity supply is equal to 15, guys. And what I'm going to do, because I see it's increasing in 5-unit increments, I'm just going to continue my supply curve. I know it's going to be exactly this 45-degree angle, and that's our supply curve. So we put supply and demand curve on one and the same graph. First, what we're going to notice is this very unique point that we have on our graph where supply and demand meet at one and the same point. This point is going to be equilibrium point on our graph. So equilibrium, this is a situation on the market when price reached its level where quantity supply and quantity demanded equals. So equilibrium, this is the situation on the market where price of the product reached its level to equal our quantity supply and quantity demanded. So guys, just look at this table again. Do you see when the price is equal to 3, our quantity demanded and quantity supply, they're the same. So we exactly met at this point at quantity of 15 and the price equal to $3, supply and demand, they equal. So therefore over here where it says 15, this is where our quantity supply is equals to quantity demanded, and this is our equilibrium on the market. Guys, when we're talking about equilibrium, equilibrium is the most perfect situation on the market. This is where we want our market to be. All natural forces, remember that invisible hand, the behavior of buyers and sellers on the market, move our market to equilibrium. This is where if our market is in equilibrium, it means that sellers, they sold what they sellers sold everything that they wanted to say, and buyers at that price, they bought everything that they wanted to buy. So everybody is happy. Sellers happy because they sold everything that they wanted to sell, and buyers happy because they bought everything they wanted to buy. So kind of remember this. Now what we're doing next, so these are the definition. Equilibrium price or equilibrium, this is the situation on the market where the price reach its level to equals our quantity supply and quantity demanded. Equilibrium price, this is where quantity supply is equal to quantity demanded, and at equilibrium quantity, you know, this is where quantity supply and quantity demanded equal at a certain price. So now, what if we're going to have a situation on the market? And again, I encourage you to take a piece of paper and pen or pencil and draw this with me. So what if we have supply and demand, and the price is going to be something different than equilibrium price? So let's suppose we have supply and demand. We have this unique point. Okay, this is going to be price, and I'm going to put that this is $3, and at the price of $3, remember our quantity was equal exactly to 15, and this is our points that we have right now. Now let's suppose that for some reason we don't concern with that right now. We studied that in chapter 6, that price of the product is actually $5. So for whatever reason, the price on the market is actually $5, and the government sometimes can dictate the price of the product. So let's suppose government and say, here you go, we are going to set this price at $5. That's what you need to do. We want to know, or we want to see at the price level of $5, what is our quantity supply and quantity demanded, guys. And it's all about reading the graph. If you understand how to read this graph, then your life is going to be, your life in economics is going to be much easier till the rest of the semester. So just think about, at the price of $5, I'm going to go and meet with my very first curve. Do you see that I met with my demand curve? So therefore, I'm going to indicate over here, I have my quantity demanded. Once again, why it is quantity demanded? Because I met with my demand curve. So from that table, quantity demanded at price 5 was equal to 9. Then at the same price level, I'm going to go and I meet with my second curve because I met with my supply curve. Therefore, over here, I will have my quantity supply. And quantity supply at this price was actually 25 units. So just look at this and try to understand what kind of situation do we have on the market. So when the price is high, it's higher than equilibrium. Okay, so the price is higher than equilibrium. Remember, when the price is high, we are the buyers. Do we want to buy a lot or a little bit of goods? We want to buy a little bit of goods, isn't it? We want to buy only 9 units because the price is too high. But when the price is higher than equilibrium, what about sellers? Do they want to supply a lot or a little bit? They actually want to supply a lot because they're getting more money for each unit that they're selling. So therefore, quantity supply over here is 25 units. Just think about it. Sellers supply on the market 25 units, but buyers bought on the market only 9 units. What kind of situation do we have on the market? We have a surplus, isn't it? So therefore, over here, this triangle is going to represent surplus. We have some unsold products on the market because the price is too high. So sellers are saying, buyers are saying some of the buyers, they're willing to purchase that product at $5. So 9 products were purchased, but the rest, whatever is the difference, what is that? 16 products are going to be just left on the market. So sellers sitting with those, excess products on the market and they cannot sell it. What do you think sellers are going to do? They're going to have to lower the price, isn't it? And I want you to show over here, and I want you to see how exactly the law of supply and demand works on the graph. So when the price of the product, let's suppose we're going to decrease the price of the product to $4. So we decrease the price of the product again. At this price, I want to see what is my quantity supply and quantity demanded. I'm going and I'm meeting with my first curve because I met with my demand curve. So therefore, over here, I'm going to say that this is my quantity demanded. And at the price of 4, quantity demanded was, I need to look at the graph. So at the price of 4, quantity demanded was actually equal to 12. So just think about, we lower the price, you as a buyer, what are you going to do? You're going to buy more units. So the quantity of units bought decreased from from 9 units to 12 units. So the law of demand says if the price of the product is decreasing, then quantity demanded is increasing. Is this what we exactly observe on our graph? And the answer is yes. Now, when the price of the product is decreasing, okay, to $4, I'm going to keep going and I'm meeting with my second curve because I met with my supply curve. I'm going to indicate that this is my quantity supply. And at the price of $4, quantity supply was equal exactly to 20. So what happened with the quantity supply when we lowered the price? Quantity supply has actually decreased because at a lower price, sellers want to supply less units. Isn't it? This is exactly what law of supply says. So law of supply says if the price of the product is decreasing, then quantity supply is going to decrease as well. This is exactly what we observe here on the graph. So therefore, if you understand how to read the graph, then your life can be so much easier. You can just draw a graph. You understand how everything works here. You can answer tons of questions from the graph. So therefore, guys, do you see after we lower the price, our surplus on the market actually decrease? It's only this little triangle right now. So, and what is going to happen when we have a surplus on the market, then the price naturally is going to decrease to the equilibrium because all the natural forces on the market lead our market to equilibrium until we're going to have, again, where quantity supply is equal to quantity demanded. So really quick, couple of notes. At price equal to $5, I'm going to indicate that this is higher than equilibrium. Our quantity supply is greater than quantity demanded, and therefore we have a surplus. So our quantity supply was 25. I'm going to put quantity demanded was 9. So therefore we had a surplus of 16 units. So the action of buyers and sellers, remember, they're naturally going to move our market to equilibrium because, once again, if we have a surplus, then sellers lower the price of the product. And when price is decreasing, then quantity demanded is going to increase. Quantity supply, remember, is going to decrease until market in equilibrium again. So I want you to understand it and know for the test. And one more graph. So let's suppose that we have, again, market for, I guess this is for our lattes. We have price and quantity, supply and demand, and where supply and demand meets, remember over here, that's going to be our equilibrium, and equilibrium price is 3, and equilibrium quantity is equal to 15. So, and for whatever reason, let's suppose that price on the market is going to be lower than equilibrium, and let's suppose it's going to be at the level of $1. At the level of $1. So what kind of situation do we have on the market? At this price level, I'm meeting with my very first curve because I met with my supply curve. Therefore, over here, I will have quantity supply, and this is going to be exactly equal. What was that number? Quantity supply at the price of 5. I'm sorry, quantity supply at the price of 1 was equal exactly to 5 units. And then at the same price level, I'm meeting with my second curve. I met with my demand curve. And therefore, here we will have quantity demanded. And at this price, quantity demanded was equal exactly to 21 units. 21 units. So remember, quantity supplied, this is how many units we delivered on the market. Quantity demanded, this is how many units we want to buy. So just think about, let's suppose each buyer buying only 1 unit of coffee or this latte. Do we have situation on the market where 21 buyers actually bought lattes? And the answer is no, because sellers at very low price, they supply only 5 units of our product. So they sold all the units, and buyers are still coming onto the market and they're asking for that latte, but sellers didn't supply it. So therefore, what do we have on the market? We supply only 5, but buyers want to buy 21. Do they bought 21 units? The answer is no, because we supply only 5 units. So therefore, this triangle is going to represent shortage on the market. This triangle is going to represent shortage on the market. So guys, if we have a shortage, what do you think is going to happen? Here you go. Sellers, they sold everything that they supply on the market, but then buyers go into the store and they're still asking for a product. What are sellers going to do? Of course, they're going to increase the price. Let's suppose if the price is increasing to $2, again, it's all about reading the graph. At this price level, I'm meeting with my very first curve. I met with my supply curve. This is our quantity supply, and at the price of 2, we're going to supply 10 units. So quantity supply has increased. Remember exactly what the law of supply says. The law of supply says if the price of the product is increasing, quantity supply is increasing. This is what we observe on the graph. And then at the same price level, I'm meeting with my second curve. I'm met with my demand curve. So therefore, here I'm going to say that this is my quantity demanded, and quantity demanded at the price level of 2 was exactly to 18 units. What happened with the quantity demanded? Quantity demanded has decreased, isn't it? When we increase the price, remember initially it was 21, now we want to buy only 18 units, exactly what the law of demand says. If the price of the product is increasing, quantity demanded is going to decrease. So now we have this shortage that it's only this little triangle on the market. And once again, our price is going to increase until market is going to reach its equilibrium again. All natural forces, behavior of buyers and sellers are going to lead our market to equilibrium, and therefore when we're going to be in equilibrium, our quantity supply will be equal to quantity demanded. So really quick notes. At price equals $1, remember this is lower than equilibrium. Our quantity supply is less than quantity demanded, and therefore we have a shortage. So you need to know for the test that if the price set up lower than equilibrium, we have a shortage. If the price set up higher than equilibrium, remember somewhere over here, then we have a surplus. We have a shortage. If we have a shortage, sellers will increase the price. And then when price is increasing, our quantity supply is going to increase, our quantity demanded is going to decrease until market in equilibrium again. So that's it for introduction of supply and demand together. We have one more little video that I need to show you, and please note this material before you move to the next one. So in this chapter, it's very important to know material, from the previous videos to understand the new material that I'm explaining.